Hello everyone, thank you for joining today. We are going to look at USD dollar. The focus will be mainly on the USD. We should know why we have to be careful from USD during the next 2 weeks. So we are going to look at the fundamental and technical perspective related to Euro USD, that is one of the most traded currency pairs, USDCHF, that is the second one, the dollar index, that is very important, and after that gold and the S&P 500, the main index. So let's go on. What do we have for the coming week? And after that we are going to discuss also what is happening with the USD dollar, because this is the most important topic that we are actually facing right now. So during the coming week, when it comes to fundamental perspective, the Monday morning will be quiet, but we have to be careful near 11 o'clock. We have euro retail sales. This is a very important indicator, and as we have seen during this month and the previous month, the overall economies are showing some small improvement in the economic indicator. So probably the number may come up to 2.7. However, I think that probably this is a bit too much optimistic during this period of time. So we have to be careful from the speculation. This is what I want to look at this week. During the end of the day, we are going to have another important indicator for the services related with the USD dollar. As we have seen, the US economy is still performing very well. Also from the US part, it is supported a lot that they are not going at all in recession. So these numbers are very strong. The services number, most of the time when they are above 50, they are interpreted like an important indicator that the economy is still strong and performing very well. So considering that all the US numbers are very strong, probably this may help the USD in the near future. However, let's see what we are facing again this week. On Tuesday, we are going to look at the Australian Bank with the interest rate decision. During the previous time, they already said that they are going to slow down and to look at what the economy is going to face during the coming months, because they want to see the real effects of the interest rates. As we all know, despite all the countries are actually increasing the interest rates, the impact of these rates is not going to impact the economy in the first or the second month. So overall, they need to wait what is going to happen. But considering that they already said during the previous month that we are going to slow down, I'm not expecting any big surprise from the Bank of Australia, and probably we may see a dovish Australian dollar during this week. So this can impact negatively the Bank of Australia. Just one moment. I have to update the chart as I see. On Wednesday, we have from Australia again the GDP product. They are expecting to slow down from 0.9 that was the previous month to 0.7. So let's see how this number will come out. Overall, the economies are performing very, very well. On Wednesday, again, we have the European GDP, Eurozone GDP. As you can see, they are expecting at least to be in line with the previous month, so nothing special at all. The Bank of Canada will be on Wednesday again with the interest rate decision. For the moment, the Bank of Canada didn't say at all that we are going to slow down. On the other hand, the Canada economy is performing very well, as we have seen the numbers. So probably we may have a stronger Canadian dollar during this week, and the probability is very high that we may see the Canadian dollar to begin the move since Monday. However, it has to be seen. On Thursday, we have the GDP product from the Bank of Japan. So also this is very, very important. And their economy is not doing bad at all. On the other hand, they are just not increasing the interest rates. But when it comes to the economic numbers, they are still very strong. So as long as they are not supporting the increase of the interest rates, I don't think that they are having many troubles like the other economies. The trade balance will be during the European morning, as I see, from Australia. And the last day, that will be on Friday, the main indicator will be these that are in red. We have consumer price index, so the inflation data from China. And this is really important considering that this will impact directly the Australian dollar. So all these numbers are very, very important for Australian dollar and New Zealand dollar as well. Also, up to during the end of the European session on Friday, we are going to have Michigan Consumer Sentiment Index. So let's see, they are expecting a slowdown for the consumer index. We can't anticipate anything at all here, so we just have to wait for the numbers. Just a moment. So what is very important right now that we have to focus is the part that during the previous FOMC, so this is the main topic that we are going to look at right now, is that why we have to be careful from USD during the next week. The problem is that during the previous FOMC, thank you all for joining, I really appreciate it. During the previous FOMC, we saw that Fed said that we are going to slow down we are going to increase the interest rates if that is going to be necessary for the coming month. So they expressed to be very supportive to increase the interest rates. So on the other hand, they were showing to be aggressive. What is something strange is that after 2 days after FOMC, we saw the CPI data that came out at 7.7. After that, everything was interpreted that Fed is going to slow down with the interest rates as long as we are having the inflation to slow down as well. And yes, they said the same thing during the previous week on Friday. It is a bit strange because this indicator was shared 2 days after the previous FOMC, and it didn't make sense at all that Powell showed that strong bullish reaction. On the other hand, now we are looking at the price of inflation to slow down, and after 2 weeks from the previous announcement, they came out again, and Powell said that probably we are going to slow down right now, considering that the economy is doing good. So this is very, very strange. This is getting more stranger, I think, during this week. During the previous Friday, 2 days ago, we saw the non-farm payroll data to came out better than expected, and the market began to interpret again that the Fed is going to be more hawkish now because we are having strong employment data, and this employment data will create higher inflation again. So overall, the market is speculating a lot. It is making the price to move up and down without any clear reason. However, on the other hand, we are looking at also the Fed representative to come out and to speak different things. So also Fed is not in line most of the time with what they are doing. So that is why we have to be very careful. I don't think that only with 1 month of data in the employment rate, Fed is going to increase the interest rates with 0.75 again, because it doesn't make sense at all. However, this speculation that is happening with the numbers right now is not good at all. And now we are going to look at also what is happening from the technical perspective. and the possible scenarios that we may face. So as we have seen, the dollar index during the previous weeks is slowing down. It is moving down here. As I have shared also before, price was in this movement, in this broadening wedge pattern. We had the breakout. During the previous month, price decreased by 6 to 7%, and as expected, it is correcting right now. So all of this is correction. However, the breakout from this pattern is actually considering that the price is going to move down. The problem that I see right now is that from the technical perspective, this is a clear bearish pattern that the price may continue, and also this triangle pattern is very clear for the bearish continuation move. My concern right now is that exists the chance that, considering that the price is actually doing too many up and downs, and the market is not sure yet if the USD dollar should be so weak, or probably the dollar is still strong, exists also this probability that I'm looking at, that probably the price might be close to a type of deeper correction before it will move down. Overall, the US economy, after all, is very strong, is showing very strong employment data, very strong performance. Nothing is happening. On the other hand, they are not expecting any recession. So it doesn't make sense for the USD dollar to be very, very weak in a short period of time, only because Fed is not increasing the interest rates. And at the end of the day, it should be taken as a positive impact if they are not going to stop the interest rates, because it means that they are supporting again their economy. They don't want to kill their economy by increasing the interest rates with further steps. At least this is a potential scenario that we may face. The problem is that the bullish scenario that I'm anticipating right now, it is not the right time with the price development that we can anticipate that move. So at least we need to see the price to rise up to the triangular pattern, and after that we can assume that probably USD dollar is going to correct higher. So this is what I'm looking at right now. I'm not so bearish for the USD dollar. I'm not expecting that to happen. However, the market is going to do the next movement, so we have to be prepared for everything. But this is at least my opinion for the moment, as I see. If we are going to look at the bigger picture, on the other hand, we can say that it has a lot of space to move down, but there is not any strong reason for the price to do this type of move. So let's be careful, and let's not be so dovish when it comes to USD dollar. We have seen the USD dollar to create strange things most of the time, so it can happen again also this time. For Euro USD, that I'm looking at since a long period of time, we are looking at the price that since when it broke above this channel pattern, here we have the breakout that was created on the daily chart, price continued to rise from this point. So this is very interesting, considering that from euro area we don't have anything interesting at all. So everything is related with manipulation right now. On the other hand, European Central Bank is not increasing the interest rates with further steps, considering that when price came at this low, it was 0.9550. We have to remember that European Central Bank didn't came out at all to say that we are going to support the economy. So they are just trying to increase the interest rates, but they are not supporting the economy with strong steps in the same way like Fed is actually doing. That is why we have to be careful. The problem is that, considering that all the economies are slowing down with the interest rates, European Central Bank probably can do the same thing again. If they are going to stop the increase or to slow down lower than 0.5 or 0.5, I think that probably we may see any strange reaction and Euro USD may correct even lower from this point. That is why we have to be careful. However, considering where the price is actually right now and what I'm looking at, we have to know that the price has to stop at a specific moment. Just one moment, please. What I'm expecting right now is that price is actually testing these areas here. So these are very strong, important areas. Look at the price where it was before. It was close to 1.07. I don't think that euro will have the power to keep rising at this moment. However, we have to be careful for the reasons that I discussed when it comes to DXY. The same pattern may face the first resistance close to 1.06 and the second one is this daily structure. I'm not expecting for Euro USD to recover everything in a fast way, considering that from February 22 until this moment price decreased by 16% and we can see that price spent 230 days in this area. I'm not expecting that the price will recover, let's say, all of this by only in 2 or 3 months. It doesn't make sense at all in this way. Euro is not performing as we discussed, so once the price probably will test these areas, we are going to look at the market to begin to interpret the interest rate decision related with the Eurozone again. Because after FOMC, if I'm not wrong, we are going to have ECB interest rate decision, and this will impact Euro again. Also, considering that non-farm payroll data came out high, so price managed to recover the bearish move that already created. However, we have to see how the price will continue to develop tomorrow. It looks like it may continue higher. However, I don't like this bullish movement at all at this moment. I don't see that power, at least considering also the fundamental perspective. That is why I'm hesitating a little bit on the bullish move when it comes to Euro USD. However, this move can happen because the technical perspective is actually supporting all the idea that we are looking at here right now. So let's see how the price will develop, but let's be careful as well. The next one is USDCHF that we are going to look at. Price is developing in the same situation. So look at the daily structure. Considering the small wave that actually is coming down, it looks like we are having a 5-wave movement. This move is approximately the same like in Euro USD that is showing the same 5-wave move, or like on the other ones that we have on other USD pairs. So probabilities that probably we may see this 5-wave movement to be completed close to the first structure area. This is very small, or probably a bit lower. And after that move, we may see a 3-wave correction before the price will continue down. So overall, if we are going to connect the 5-wave movement with the 3-wave correction, this is coming in line with what I'm actually expecting, that the USD dollar is not going to be bearish in a very short period of time. Here we have the 5-wave structure on the 4th hour right now. This is a very clear pattern. We have the first wave that was created, the second one. On the second wave, we can see an ABC wave correction. So this is a type of channel or flag pattern. We have another triangle pattern on the 4th wave that is being created here. And probability for the 5th wave is coming again. With this probability, we have to be careful also with the FOMC, because FOMC is going to be in the mid of December. So probability is that probably we may see USD to correct for the ABC movement. So this 3-wave correction may happen, and this can be in line in the same way like I'm looking at DXY. It looks very interesting, and this is getting very clear in this way. So let's see how the price will develop also here. It may continue lower from the actual point, but I don't see any big movement at all. That is why we have to be very careful also here. The correction may come soon. The next one is gold. What we have to be careful, this is very important. Look at what the price is actually doing right now on the daily picture. Let's make it weekly. What do we have here? So on the weekly chart, we can see that price is testing a very strong resistance area close to 1,800. But on the other hand, the weekly candle closed very, very bullish. So if we are going to look at also what is coming from the other part of the structure, this is showing that the price is actually testing a very dense area where the price moved up and down, up and down. So this is our area where we have a lot of buyers and sellers at the same time. Also, this structure is very solid. Price may continue moving higher considering the weekly candle. However, let's break it down. We have to be very careful. If we are going to look at on the daily chart for gold, we can see that we have some developments. Here we have 1, 2, and probability is very high that we have the 3rd wave here. We can see the 4th and probably the 5th. And look at what is happening on a lower time frame. I'm not going to move this, but we have also a 5-wave move that is coming here. So this is another 5-wave move. If price is going to confirm this 5-wave move for the 3rd wave completion, the chances are very high that we may see a 3-wave correction and the completion of the 4th wave. It may come close to 1,700, but it may happen also a bit higher. So probably any small correction before the price will make another move. This is in line for the moment also with the structure that we are having from the other side, from the left side that we already discussed. What is important is the fact that we cannot sell and we cannot buy at the same time. The sell is not a safe sell as well at all, considering that we have strong daily candle. Look at how strong is this candle here. We have the next candle that closed almost bullish because price deleted all the losses here. Look at the losses where the price deleted. So we cannot buy, but we cannot also sell here. If we are going to look at the price on the lower time frame, we can never know how the price will develop. Considering the overall picture and the small picture, considering this place here, that the price already stopped above the previous structure, this small structure, from the technical perspective, it should continue higher. The problem is that now the price is just blocked between the top, that is this part here, 1800, and the support area 1780. So that is why we have to be careful. The bullish movement at this point will continue only if the price will break through this area, and after that it will continue the extension from this zone. So for the moment I don't see anything at all how this trade will perform right now. If price is going to create a new low, that let's say if price is going to break 1780, this will increase the chances for the ABC movement that we were expecting. So this will increase the chance for this movement here. This is what we may look at if price is going to break down from this point. So it is not an easy perspective at all, considering all of this, the small structure, the bigger structure, and the Elliott wave that is developing in a very interesting way. We are having a 5 wave in blue within the third wave that it can extend for the 5th wave. So let's see how it will develop, but I don't think that this is the right moment to sell or to buy as well. So this is very, very tricky overall. For US 500, what we have to be careful and you have to know, overall this is developing very good. Look at what the price is actually doing. I'm keeping this as simple as possible. Price came down in this way by creating a type of broadening wedge pattern. Overall, it looks completed, but I think that probably it is not the appropriate time that we may think that indexes should continue to rise more. It means that if indexes is going to rise more, also the stocks should recover more, and probably this will create another strange situation when it comes to US economy and the Fed expectations. From the technical perspective, if we are going to look at what the price is actually doing, we can see that price is close to the support area that is coming from above, and all the previous times that price came down from price tested the resistance area, it moved lower. So we can see the price moving lower from the previous zone. We had the other zone because they are in line with each other. We had the lower support zone that reacted strong as well, and here we have the other points. So that is why we have to be very careful right now with these areas, and the chances are that during the coming days we may see US 500 to move lower, because this is already in a critical area. Considering that US 500 is already showing to be more clear than the others, the probability is very high that probably we are close to see USD dollar to correct and to be strong again during the coming 2 weeks. This is one of the reasons that I'm looking at for USD dollar in this way. If indexes are going to move down, so let's say S&P 500 is going to move down, I think that the minimum movement should be close to 3,900, but this is very small, and the normal correction will be close to 3,800. Until that moment, we have to see how the price will develop, because we can't know what is going to happen later. So it can continue to move lower from this point, but it can also create any bigger expansion in this way. So let's see, because all of these are possible. Thank you very much for joining. I really appreciate it. So all of these movements are possible, and let's see what is going to happen during the coming week. Thank you so much to also to all the guys that are writing from TradingView. I really appreciate it. So this is overall what I'm expecting for the USD, dollar, and the main indexes and gold as well. So hope you guys enjoyed this analysis for today from the technical and fundamental perspective. And let's hope that we are going to have a profitable week for the coming days that we have from December. As we all know, most of the days in December will not have very high trading volume, so we have to face the low trading volume. Many traders will try to calm down, not to trade too much when it comes to forex, stocks, cryptocurrencies. It means that all of this small liquidity will create problems in our trades. Most of the time, this type of the problems are shown in false breakouts on the patterns and in strange movements in the market with very big up and downs during the day. So let's be careful and let's see how the market will develop during the coming weeks. Thank you for watching.